Hey, what's up, everybody? Today I have a weekly market recap backtesting session that I'm going to be doing for you guys. Now, if you're ready to make some money, let's go to the charts and backtest last week's price action. Okay, guys, so here we are at the charts, and I have the backtesting replay button already ready for this week's backtesting session. You can see that this was Friday right here. It says on the bottom right there. Sunday going into Monday, but this is all the new day. And what I want to do is just, okay, well, where are we? We have been bullish, right? Extremely bullish. And market gapped open, created new all-time highs during Asia, and we can see London having a nice size bearish retracement. That should be an indicator right here, guys, that there could be a continuation, but it's already filled the gap to continue going longer, and it's coming down lower. So this is the hour. I can see a gap right here already created. But if we're looking for shorts, this could be a target, or we can look for gaps up here as entry models, right, for where we wanted to get in. But let's just go ahead and go down to the 30-minute right now and just look. Oh, the only gap I see is probably this one right here, and then this one right here. So we're just gonna keep going. It's 6:30. 7:30, 8, right? Is that 8? Yeah, 8 o'clock. 8:30, 9. 9 had a big drop at the market open, or the pre-market. So now what we're going to do is go to the 5-minute chart, and it's actually showing as 9:25 right there, guys. That was a good call. Okay, 9:25. So this automatically looks bearish. It already swept this previous day high a little bit right here. So what we could do is look for a little retracement to then get in for, look for an entry to get in, right? So we'll do a fib. So this is a bearish move right here, guys. Like, we see this, it gapped open, it's bearish, it closed below this gap here. It's a little lower. It's already sweeping under this swing low. Did I already take it? Yeah. So what we could be doing is looking for a bearish move. Now, I've been wrong all week. I only had one winning trade this week, and I pulled, by the end of the week, I was 0.5 in profit. So a little profit, essentially break even, but this was a rough week for me. I did move my break even stop loss on one of the days, so that kind of didn't help. So let's see what we got going on here. We could look for, a retest of this level right here. Any gaps? I see these gaps right here on the 5-minute chart going into the market open. I could look to get in at the London low right here. 50-point stop, which would be right there, targeting probably the previous day low. Let's do a 1 to 5, just to see what's gonna happen. Okay, now I'm not doing this all the way up to over here, because it already had this drop. So what I could do is move this to right here, and I actually see that it aligns with a 38% continuation level. And the London low, if it starts to push higher from here, guys, I think it would be a reversal and I would have had my loss. But as of right now, this move right here is bearish, and this right here is, I'm not sure how much this is gonna come up, but if my trade idea was to say that it's gonna come higher than this right here, this little swing high right here, it would then change market structure and be bullish, but I'm saying it's bearish. I'm waiting for a retest. It could come higher, but not swing higher than this. It could come a little higher to then continue lower. Higher lows and lower highs, right? So lower low, all these little lows are being created, right? Lower lows, and then a lower high right here. All these lower, even this is a lower high. But if, what I'm saying is, if this right here then starts to come up and go higher, then it's a bad trade idea. But because I'm saying it's going to come up here, I'm giving myself room to then have it continue going lower. So let's just let this play out now on the 5-minute chart. And thank you guys for being patient. I just want to show you guys these setups. I want to show you guys what it looks like to have the mindset of someone entering the market, and what it looks like to actually, back test. This isn't live trading, but 5 minutes till the market open, this would be a great trade idea. So let's just go ahead and go up 5 minutes. Okay, so you saw that right there. There's probably a gap right here in that area of about right here. So I think that 38% continuation level was solid, aligned with the London low. So let's just hope and pray that it continues going lower. It already pushed a little lower than this, so already good. Okay, at this point, we're at 71, so at 30, right, about 20 would be 50 points. Yeah, right there would be TP1. We move stop loss to break even. So this is right now is a break even trade, and we would have got stopped out, right? Now let's see why, right? So this is the part about backtesting that's important, right? So we did have a break even trade. Right now, guys, at this point, just lock yourself out. It's a 0 day. You didn't lose nothing. You didn't make nothing. But remember, it's long-term vision, long-term thinking, and keeping and preserving your capital, and just having patience. You don't got to make money, because by the end of the week, you should have made something just by following the rules. So what I want to do here is just see why this happened, right? Like, okay, well, I can assume that like it needed to come down here, It rejected the 70%. It's not even a level that I would have felt confident, in. But the big figure 45,000 is right here. So we could have entered at 45,000 for the long, right? 45,000. We would have been about 8 points saved from that entry, So let's see what a long would have. I wasn't anticipating a long, but let's just see what happens here if someone wanted to get long, right? 50-point stop. Target, we'll just say Asian session low, or right, TP4, right in between the Asian session low and London high. So let's just continue here. Ooh, choppy market today, guys. Just real chop. So someone going long, they would have been able to move their stop loss to break even. So just a really choppy day. That's why, oh yeah, this is just choppy. If you would have had to get in at the previous day high pre-market at 30 minutes before the market open to have been able to withstand all of this price action, right? Let's, I don't get in pre-market, but let's say you got in right at the previous day high, right, one tick above it, and you held this to you guess you could have had like a solid TP4, but for having to hold it all day like that would have been a little stressful, but it would have worked out, right? This trade actually went to TP3, so that would have been a solid trade for right in the morning as the market opened, but we don't trade pre-market. So this was just a really bad day, guys. You can see, there was nothing really solid. I had a hard time looking for an entry to get in, for our market open. But what we're going to do is just continue going forward. So that's a break-even day. That's why it's important, guys, just to take one trade. Just one trade. Because it could have just been a choppy day for the rest of the day, and you would have been getting chopped up, taking little losses, paper cut losses, hurting your P&L, giving back profit, digging yourself deeper into losses. So just one trade a day, and that's that, okay? So what we're gonna do is go to the 30-minute and continue going forward. Okay, we're gonna go down to the 15-minute. This might have been Newsday, because see how much volume was here during London at 5:30 essentially. So what we're gonna do is do previous day high, that Asian session high, previous day high was up here. London high was created right here. London low was created right there. And the previous day low was right there. Oh, Asian session low. Can't forget that. Okay, and then we just drag these all the way to about 18, 17, 18. Okay, so we see market structure. We see these right here. Watch, I'm going to show you guys a little something. Do we have a drawing tool where I could? Okay, I don't really see a drawing tool, but I'll use this right here, okay guys? So you can see that there was this right here, and then it created this right here. So there is a low right here and a high right here. Market opened, broke that high, started to come down, creating these market structures to lower lows, right? You know, taking out this low right here, right there, couldn't reclaim this. This move happened right here, right? But it couldn't take this out right here or this out, right? So with that being said, we should be looking for shorts where, so this is creating higher highs right here, higher highs, and as price, you know, breaks over here, we should be anticipating shorts to come down because it couldn't break this high. Now, it did come down, coming back up, but we've already been bearish for that first day. So what we can anticipate is a move to continue going lower. So let's just go ahead and go to the 15-minute chart now, right? And we are at the 545, 6, 615, 630, 645, 7, 715. And see how it's not really reclaiming, it's all just kind of holding these levels right here, cannot break higher than that. So anywhere in this general vicinity, I would have said probably is a good trade, but we're not trading pre-market. So what I'm gonna do is just draw a box up here and say that's probably an area of interest to get in for the shorts. So let's just keep that there for right now. It's 715. 730, 745, 8, 815, 830, 845, 9, 915. So what we're gonna do at this point is go down to the 5-minute. Hopefully it doesn't go to 930. It is 925. Okay, so like I said, guys, this right here area was a general area where we could have looked to go short. You know, we could have just been right in the middle, 50-point stop. But let's target this previous day low. But what would be solid, even more solid, is like if it starts to break below, get till here, we could just move stop loss down here because it's going to want to come down and take these lows. So we could, you know, it's a 1 to 5. We'll do a 1 to 5. So with that being said, where are we looking to get an entry? Okay, well, we could do a fib from this high to this low, and it already went and had its retracement. So what we could do is go from here to here, and it almost had that retracement up to this 50%, 38%, 50%. We could have an entry right at 45,050. So with that being said, we are betting that it's not going to go higher than these levels up here. It's already broke, you know, right here, right here, right here, right here, right here. Now it's starting to create market structure going down. It could come up, but we're betting that it's not going to go any higher. to then come down, sweep this low, come maybe test here, come back higher, and then keep going lower, creating market structure going down. Now let's just go ahead and see if what actually plays out here, okay guys? So that's my trade idea right now, going in the market. It already rejected this area up here, so I'm saying it's not going to go any higher, but if it does, it could come up into this area again and then come down. But let's just go ahead and see what happens. Wow guys, you guys can see exactly how that happened. Look, it came up, rejected that 38%. It actually got to the 50%, but I wasn't trying to get, in the sniper entry. That was still 10 points, 11 points off. But let's see what happens here, guys. We're break even now at this point because it already had its move down here, right? So let's just continue. Wow, guys, that was amazing. An amazing move. Keeping stop loss. Okay, at this point right here, as soon as it broke below this low right here, I would have probably left my a trend line. We would leave our trailing stop loss right here. Okay. Now at this point, as it's coming lower, we could do a fib retracement from and follow this volume. We're anticipating it's not going to come back any higher than this. So what we could do, any higher than the 50%, right? So what we could do is actually move this. We can start moving it down. If it wants to come up into the 50%, retap the London low and come down lower, we're still making all this profit from this move. So watch. I'm just going to show you guys what it looks like to move a trailing stop loss. We're going to just follow this. So that's actually really good, move. I don't think it's going to come down any lower. If it wants to retest anything, it's going to be that previous day low. So what we could do is, and not go any higher than this, right? So I think that's a good spot right there. You'd be securing profit there. We're going lower. And as we're going lower, we're just going like this, moving this a little lower. At this point, I would feel confident at the 50% because the 38% is right here, previous day lows right there. Even if it wanted to come back up, test the previous day low. We got in at 45,050. We are at 44,925. That is 50 to 50. That's TP2, 2.5 right here, guys. So worst case scenario, we're taking a TP 2.5 for the day. We got in at 950. It's already at 850 or 45,050. It's at 850. So that's TP 4 right here. right, your trailing stop loss right above this, and then probably walked away with like a 3.5. Okay, it is 8 o'clock. We're gonna just move some of our stuff around. London high right here, Asian session high right there, previous day low right there, London low right there, Asian session low right there, and the previous day high was right there. So we're gonna move these to that 18. End of the day, New York session. Okay, we're gonna go down to the 15-minute chart, and we are sitting at 8:15. What we can do here is just kind of scroll out, see where price is at currently. We are bearish right here. Bearish day, probably gonna continue bearish. There's no reason to go long. We're sweeping these lows now. Market structure has changed. Right here to right there, came down, swept that. But once this right here came up and it didn't reclaim and started to come down and break below these lows, it's bearish. Market structure has changed bearish. We are bearish. And then once it broke this right here, we are bearish until further notice. So look for shorts, because there's a higher chance that it's gonna have a bigger move, short move play out. So we're at the 15-minute chart. We can do a fib retracement from this high to this low. And what we could do is say, hey, you know, it could take out this London high, Asian session high. We're gonna go short position, London high, 150 point stop, which it's kind of right there, but we'll say that is a solid trade idea right there. And you know, if it's breaking below these lows, if it breaks below this low, we can continue going lower, which we're at sitting at 731. We could, you know, go down to like 700, which would be a 1 to 3. Or if someone wanted to hold a little longer, we could go to 650. We could have a 1 to 4 trade going into the day. So for right now, this is my trade idea. There is this gap right in this area where it went into it already multiple times. It's having a hard time breaking above this. So as you guys can see, I have my buy limit order right at that London high, 851, and it came down, came back up. So we would have got activated right here at 9:33. So I'm gonna start going down to the minute charts with you guys so we can get a better reading. So we weren't break even right here. It came down, came back up, and we got our entry 3 minutes after the market opened. That's what it means to be patient, guys, right? So from this point forward, we're just gonna start clicking. Okay, now we're break even because we got in at 8:51. So at 799 right here, we are break even. So if it comes up and stops us out, we're break even for the day. Remember, we have trading correctly. So we're just gonna keep going forward, and it's having these candles closures bearish. So we broke these lows. We are now we have broken the lows. We could technically at the minute chart, we are already at break even. We could move the stop loss to like maybe right here in this range, a little bit in profit, nothing crazy. I want to see a bigger move to this next point of liquidity, which would be the previous day low, right? Previous day low. I want to see what happens. So we're just gonna continue going forward. Okay, and it hit the previous day low. It's having its retracement, and we could be looking for a remember, we're not looking for this to break higher than this level right here, because if it breaks higher than this, it's a change of market structure on the minute, right? So let's say you were trailing, I would say nothing higher than like maybe like right here. Okay, so if you wanted to trail, this already tapped, we got in at 8:51, 7:31. That's a TP 3.5 essentially right there, 3.2, something like that. So 7:30, 8:30. No, that's like a TP2 trade right here, guys. Okay, so TP2, I would say just keep it at break even for right now. Okay, guys, we're just gonna delete that. We're still break even for the day. Okay, still early. 5-minute chart. Let's go to the 5-minute. See a little bit clearer for you guys. What we're gonna do is do a fib from this high where we got our that move to this low, and it's at the 38% continuation level now. So it's having a little pullback to get an entry. Technically, someone could move their stop loss up a little bit lower. If it comes all the way back up here, guys, it's breaking these lower market structures, lower time frame market structures, and it will continue going higher. So yes, if you wanted to keep your trailing stop loss, I would say maybe like around 8:36. So you're still securing something for the day, right? Let's see what happens. If these next candles close, oof, guys, that made me a little nervous. 79%. That's why I like to usually keep it right at break even until the higher time frame closes like bearish. And I don't know what the higher time frame is right now. So we know that price is right here. Let's go to the break even right here, right? First trade was break even on Monday. Second trade was a TP5. This trade, it was in profit, but if we are break even, we're okay with it because we still have Thursday and Friday. And even if we lose those days, we'll still be up TP3 for the week, which is a winning week, a nice winning week. Damn. So, okay. So soon as this happened right here, closed, and it started to come up higher like this, I guess somebody could have moved their stop loss above this, at the 79% level or a little lower. And as it came up here, it would have been runs because this market structure was right here and it got violated right in this candle. As this candle closed, it closed higher than this candle, lower 5-minute, and You know, if you wanted to secure profit, you would have been able to, you know, at least spend a little bit in profit here. This sucks because it was almost a TP2. Let's see what, let's just move this up. 2.4, you know, we were up essentially TP2, you know, that was a good, you know, profit on the table. So Wednesday we're break even. This is why, you know, just follow the rules. And we're gonna go to Thursday. From Thursday, and on Thursday and Friday, I'm gonna be journaling the trade with you guys because I didn't journal on Thursday or Friday. So yeah, Wednesday break even. Okay, Monday and Wednesday break even. A dub on Tuesday, and you know, we're just gonna see what happens. We're gonna go to the 30-minute and go forward. Wow, okay, that hurt me big time because we got in for the short, so we didn't take nothing off. It came up, stopped us out, came back higher than this, got in here to then go down. Wow, I think there was news on this day. I should have waited for when news came out so that I could get in for the trade, because then once this happened, let's see what happens on the 15-minute time frame. So as this happened, you know, came up, came down. If it broke below here, it would have been a safe trade to safe to assume that it's gonna continue going lower, 50-point stop, and we could have caught, you know, this trade 1 to 7 right there. Not the whole move from up here, but it did, you know, maybe on a 5-minute we could see a little better. Okay, so it broke here, had the retracement. Let's see if we can get in a little closer to the 38%, right? We could have got in at the 38% and waited for this as it came up to then go down to then move our stop loss. And yeah, nice 1 to 7 trade. We could have had that as a market. No, it's all market structure, right? Market structure and these points of liquidity. We could have got in right at the London low. As it's coming down, you know, anywhere above the London low would have been a good entry for the short. It didn't happen. We're not gonna cry about it. This was later on in the day, news day. But I'm just saying that, you know, if you were around during news, you could have waited for this, waited for the 38% pullback to then get short, just to verify that it's a bearish closure. Kept going down. Did a Fibonacci retracement. Wait for that 38%. It's above the London low. Continue going lower. So we're break even on Monday, TP5 on Friday, Wednesday we're break even. So let's do Thursday and Friday. I have you guys now for 33 minutes. I'm gonna try to close this up in 20 minutes. We'll go to the 30-minute chart and go forward. This is why break even trades, guys, you have to respect them, because you can come back later in the evening, analyze your trade, and then be more in tune with your precision in the markets. You don't have to say, oh, well, I'm break even. I still have my one loss that I can lose a day. I'm going to take another trade. Don't do it unless you're don't do it until you have at least pulled out $20,000, $30,000, $40,000 in profits, withdrawals, payouts, because then at that point, you know your system, and then you've done enough backtesting to where you know that there is re-entries or other trades later on in the day. And at that point, you may not even want to take extra trades, because if you're making profits of that nature, you should just stick to your system, right? So what we're gonna do is we are at 5, 5:30, 6, 6:30, 7, 7:38. Okay, we're at 8 o'clock. We're gonna go to the 15-minute chart, tighten this up. Previous day high was right here. Let's bring this back a little bit. Okay. Asian session high was right there. London high was right below that. London low right there. You can delete this. Asian session low was right there. And previous day low was right there, okay? So what I want you guys to do is just remember we're bearish in our market structure, right? Keep that in mind. You don't want to deviate too much from that bearish market structure, especially after that news. from the previous day, Wednesday. So what we're looking for is, we're bearish Monday, Tuesday, Wednesday. There's no reason why we should be bullish on Thursday and Friday. We'll just continue the trend, right? And it's already come up this far, right? We could have, waited for the 79% fib level during, London time to have gone in for the shorts. Let's see if this would have been a good trade. 50-point stop. Based off of fib, this would have handled that, but we could have waited for this Asia session to close, and it's already rejecting, this came lower, started going higher, had this wick right here. For New York, we could have got in, let's see what a fib from this high to this low would have been. And there's a 79% fib right there. We could have said, well, let's just go short right there at 44,838, okay? 44,838. And what we could do is essentially target this, either this Asian session low or this previous day low. We'll do the previous day low. We'll see what happens Thursday, right? But I'm not, this is just an idea. We're gonna have our actual trade idea a little later. It's 8:15, 8:39, okay? So I'm gonna move these a little bit. This London low could go a little higher. And I'm gonna get rid of this fib. It's in the way. This fib in the way. Okay. I'm gonna just keep this right here, guys, because I think this is, would have been a good entry. It already started coming down, creating this London low. Break even trade at worst already, guys. So even if this trade came all the way up, the person that got in here is break even. So what we're gonna do is it's 8:45. We're gonna go one more 9, and now we're gonna go down to the 5-minute chart. It's 9:10. What I see here is it's choppy, right? It's choppy. Had this move, but it never broke higher than this, or it did right here. But as it broke higher, it had this move to come down lower. So there's this area of interest that it could not break. So right here. So we could say, that's the high. What we could do is do a fib retracement and see if there's any gaps that align with that, right? So we could do a fib from there to there, and it already rejected the 38% at, 8:25, a little bit before. But is there any gaps in the market? There's a gap right here. It tapped into it. We could say we could enter right here. So it's 9:10. I'm gonna say I'm going short right at this level, 750. It could go up to the 800 level. It's right there. Oh man, I'm a little conflicted here, guys. Is there any, I don't want to go to like the 1 hour or the 4 hour already, just because I don't want the trade to show that it's already playing out. If there's any gaps, should I do it? Because I want to see if there's any gaps up in this area to then go short, right? But it's already creating market. Let's look at market structure, right? Right here, low, higher, lower, higher, lower. My entry should not be this high based off what I know. If I'm looking to go short, I would like to go short based off these 5-minute candles, wherever this lands, right? Look for an entry, right? Even if it's right there. I guess this is a good spot to get in, right where I'm at. Why was I doing that originally? 750, 738. Why was I in at 738? I don't remember. But it is 910. What I'll do is get a little more finessed with that placement, and I'll say right there. what we can do now is at the 38% continuation level. Now if it starts to go higher before, and we'll go to the minute for now, right? It is 9:14. I'm gonna say 38% fib level is where we'll get that reaction. So let's go 9:15, 9:16. Okay, and it's melting. 9:18. Okay, we start having a move up higher. 9:27. I would say that there's still this gap up here. Maybe at that 50%, we can do a 50%. And if it goes higher just to come lower, then that's runts, right? Higher time frame. This could, just be the low, high, low, come low, and then come higher to then go lower. So we got to pick a point where we feel like it won't go any higher. And I don't think it's going to go higher than this. Okay, so we're at the minute. It is 9:28, 9:29, 9:30. Okay. We could get in right at this level. It's at 50%. We already missed this trade right here, guys. We could do a little thing right here. We could, wait for it to come back up to then go short. There is this 1 minute gap. I'm gonna wait until this London low gets, we're just gonna wait. I think it's okay. This yeah, I think the London low has a high chance of coming back up to then go short. So we're just gonna keep going. Oh my God, it came up to that London low. It blew past it. We're in drawdown. The original spot was a little higher. Where would have been that safe spot? Right above this high would have been a good stop loss, so 50 points. 713 would have been a good entry, keeping the stop loss up there, 50 points. We would have had to wait for price to come up in here to have a safe place for stop loss entry. I think I'm gonna start doing that. Okay, I don't want price to go up higher here, higher than this. So this is where I'm gonna keep my stop loss. I want 50 points at least. Okay, 713 would need to be my entry at worst case scenario to hold this. So that's what we'll do, guys, is we'll just say we had a 712 entry at this point, okay? And it's, closing like this. This might be a losing day. Oh, actually, look, guys, so okay. And a losing day, okay. But after this right here, we would have moved stop loss to break even, so it would have been a break even day. So I hope this day doesn't turn into chop. It did go back into that area where I said, price could come back into this like box area. So if this falls, that's gonna be tough on, Wow. Break even day. All right, can't get upset because we're learning as we're going. So I said there was this spot where price was rejecting it, right? And it actually kind of went past it a little bit, right? And then came down. So I'm gonna have to keep that in mind when I'm doing my analysis. I'll keep this up, but there was this move where we do a fib. It has nothing, it doesn't align with anything. There's nothing really based off of that. Let's see if we can go to the 4 hour and see if there was any gaps, right? this. There's this 1 hour. Yeah, so someone got in earlier at that fucking London high. They would have been break even. They would have caught a monster move. I'm thinking this is still gonna play out for this person right here, but the move was right there. Where's the gap? Okay, the gap is right here on the 1 hour. Someone could have got in right there and been well within that range. 30-minute, 5-minute. So market opened 9:30, came up, came down. We could have been on the lookout for this gap right here, right? And as it came up, came down, came up, came down. Yeah, that would have been the entry. I didn't see that 1 hour gap because I'm not trying to change the chart so much because I don't want it to show too much. Sometimes it'll do that. But then this would have been a great trade, right? You know, we could have held it to 1 to 5 or down to the previous day low. Let's see what happens if it goes to previous day low. Yeah, tapped it. Okay, cool. It was a good trade, right? Good trade. Could have been out right this level to 1 to 6. Okay. So Thursday we didn't make anything. I'm gonna keep my analysis as break even, but the 1 hour gap was respected, which was right here. It came back into these areas, wicked, came down lower. Got to keep that in mind, guys. I'm gonna try to keep that in mind this week. Is look at the 1 hour, 4 hour, look for those gaps, and then just hold myself accountable to those gaps, right? Let's see if that gap aligns with anything. Nope, it doesn't align with the 50, 38, or 79%. I don't really want to use a fib at that level. What's the price here? 750. 750 is kind of like a mid-figure level. So what I want to do is actually just 1 hour fair value gap, middle. Okay, what I want to do here is just hold this there and just kind of see, you know, it happened at 10, son of a bitch, bro. So 30 minutes after the market opened, that's when I tell you guys that it doesn't have to happen right at 9:30. It could happen in 30 minutes after the market opens. It'll, you know, have some volume, create some chop, take out buyers, sellers, and then get to the actual level to then do its thing. We'll hold a 1 to 6. So what I want to do is go to the 15-minute chart and just screenshot this and journal. We are 50 minutes in, guys. I think we're gonna be a little over the hour mark. So add note, the move happened at 10 a.m. at the 1 hour fair value gap. It then pushed to the previous day low for a TP 8. What was that? What did that mean? TP 6. Oof. No, TP6 would have been safe. For a TP6 move. For a TP6 move. Be patient and waiting until 10 a.m. Eastern Standard Time, because the move could happen at that time. We don't trade pre-market, so make sure to have a buy limit or sell limit order place to avoid FOMO. Placing the sell limit order at the 1 hour fair value gap would have been amazing. Okay, we're gonna paste that, the photo, fair value gap, yeah, would have been nice. Did it go to the 800 level? Let's see, 800, nope. So fair value gap was respected. So what we're gonna do here, guys, is I'm gonna just save this real quick. And then we're gonna go to Friday, but we're gonna delete this stuff. So I'm gonna do the 1 hour fair value gap and 4 hour time frames going into the next day. So we're at the 4 hour. I'm gonna kind of continue real quick. Any gaps being made on the 4 hour? Still okay. We're now in London. It is 6, 7, 8, 9, 10. I cannot go another click or else it'll, you know, but I know there's a gap right here, right? So there's a 4 hour gap that was created. So we're gonna go down to the 1 hour, and you know, we could say there's a good entry somewhere right there. It's a 300 point stop. Now we're at the 1 hour. It is 9 o'clock right there. It could create a gap right here in this area. So this closure, this 1 hour closes, right? 9 will close and then 10 will happen, but you know, it could come and fill this area up here on a smaller time frame, 30 minute. We'll go down to the 30 minute. So this is a kind of a little ways away from where we are. So I wouldn't say that's probably a good entry, but what I could say is that this might be a good entry right there. And we'll tighten this up to like a 1 to 5. Okay, so we're at the 1 hour. We'll go to the 30 minute. Hopefully it doesn't go too far. It is now 9:30. So I'm not sure if I had to push higher to then go lower. So we'll go to the 15 minute. That's why I don't like doing higher time frames, because it could mess things up. So 9:30 had the push down, okay? 9:30 had the push down. It was hard for me to kind of, that's why I don't like doing that. But right here, you guys can see on the 15-minute chart, there is a gap that was created on the 15-minute chart. So what we could do is wait for, you know, a retracement. If it happens. Oof, I don't know about that. I think probably getting in at the 50% might be a better. Rock in a hard place, guys. Wide ranges. Right now, I think probably a 100 point stop would probably be the best bet. 1 to 3 for today. So conflicted right now, guys. Okay, we're gonna get in at the 38. It's above this block. Technically, I like to get in right at the highs. So this area right here of that fair value gap. So let's test the theory out. If it does reach up here, okay? Now continue the trend, right? Or we could go even a little lower and target like 200 level. What would that be? TP6, let's say TP6, 250, okay? Let's see what happens. If we would have just waited, placed our sell limit order, remember guys, just keep your limit order at those gaps, because who knows how high this is gonna go, right? Who knows how high this is gonna go? You know, so we have an idea, but it came up, retested, and it started having a reaction again later on in the day. Remember how I said there could be multiple reactions on in the day. So we waited for the retest. It is 5 minutes. We'll go to the 5-minute chart. We're break even right here. And what we're just waiting is to see if the market just keeps melting for the day. And the market closed. Okay, so yeah, the market closed. So at this point, guys, I didn't even move these from the previous day. Oh no, okay. So for Friday, you know, we could do the previous day low, which was right there. Asian session low, which was right there. London low, which was right there. Previous day high, I'll wait for that. Asian session high, right there, and the London high, which was right there. Previous day high, right there. Okay. I'm sorry guys, I didn't move our magenta liquidity lines. And actually it rejected that Asian session low perfectly. So we had a retest, right guys? Even if someone were to have gone in at the London low, they would have got stopped out right here at the Asian session low. But remember, we had that 30-minute fair value gap, which was also a 1-hour fair value gap. Oh no, it wasn't. The 1 hour was right here, which we would have still been able to like have a great trade. So 30-minute looked a little cleaner. So I'm gonna do this right here. 30-minute. And then the I'm gonna actually erase this and do this line right here and align that with the 30-minute. side of trading, which is more emotional and psychological, and giving you guys examples. Also showing you guys where I'm at with my trading right now. In my dashboard, I am down $500. That's 2 trades essentially. So coming Monday, I'm going to be looking to trail if I'm catch a good trade, and hopefully, catch a TP2 at minimum, be back to break even, or hopefully catch a TP3, TP4, TP5, something along those lines. Theoretically a TP6, and have a really good week this week. Have a really good month. And remember, guys, hold those break-even trades and do not trade anymore. I had 3 break-even trades on this backtesting session, 1 losing trade and 1 win. So at the end of the week, we were, oh no, wait up. I don't remember exactly, but I know we had 3 break-even trades. Friday was a loss because it wasn't at this level. So Friday was a loss, and then Tuesday was a win. So we finished the week in TP4 on a very choppy week. Which would have been still profitable, right, guys? I gave back 1 trade this week from moving my break-even stop back to its original spot. Or no, wait, I took a break-even trade, and then I took another trade which resulted in a loss. So just lock yourself out. Understand it's a long-term game. Have patience. Come back tomorrow and wait for another setup, something a little bit more clear, concise, and you will do good. Keep your sell limit and buy limit orders at those gaps. So when price comes back up, which it could do throughout the day, come retest an old price to then have a continuation move, and you can catch profits that way. But remember, 1 trade, 1 and done, long-term vision, and you guys will succeed. You guys will be profitable, and you will get a payout one day or continue getting payouts. Now, thank you, and I'll see you guys later.